in the studio in Johannesburg from Vestact is director, and that is Sasha Naryshkine. Look at the Far East. Look at the Hang Seng, up 2.75%, Sasha. Look at the Shanghai Composite, up 2.2%. And it's all to do with the fact that the market's been going up, so there's momentum. That's the first point I want to make. Second point is weak trade data, so stimulus in the offing. That's what they say.
Yeah, exactly. So I think the point I try and make about China, but always overhash it, is there are very few places where you can invest, because essentially it's still pretty much a closed economy. So when you've got such enormous population with the propensity to embrace gambling, and I'm not suggesting that this is what it is, there's suddenly either a rush for the exits, or in this case a rush to the front of the queue. So you're getting the equities market, which has been slumbering for a long time, suddenly get a whole lot of people who are saying, meanwhile, in China, the domestic economy, from a consumption point of view, which should be the real driver in the end, is not doing, I guess, what any of the internal administrators that be want in China. So you've got all the building done, essentially, even though there's still a lot of construction and repeat construction to be done in China, and so don't expect steel consumption to rise at the same sort of rate, and that's reflected in the iron ore price. But what you want is consumption of goods, consumption of services. So you want the KFCs and Starbucks of the world to be able to be indicating stronger and stronger sales from domestic mainland China.
Sasha, if you had 2,000 Rand in your back pocket, what would you buy?
Buy one? You can't even buy a Naspers share, because they're over 2,000 bucks a share now. But I think again that's reflective of a 10-cent share price, which is at 170 Hong Kong dollars. So if you do a quick math, which I did this morning, you must remember that Naspers owns 33.85% of 10 cent. So at the exchange rate of 156 rands to the Hong Kong dollar, you get to about 830 billion rands worth of holdings in 10 cent. Now, even though Naspers was up quite sharply this morning, their market cap was about 840 billion. So the rest you're getting effectively for free. You're getting a digital satellite TV business, which had revenues, I think, of over 36 billion rand and EBITDA of about 10.5 billion rand last year, for less than 8 billion rand in total. So it kind of sounds strange, but I think what it is we're so arrogantly clever down here in South Africa that we're discounting whatever's happening in Hong Kong.
So we should be buying this thing at 2003, whatever it is at the moment, which seems like a lot of money. But it wouldn't seem like a lot of money, Sasha, if we split the share, if they split the share. Surely there should be a share split now to make plebs like myself have a look at this in a more favourable light.
Yeah, but you'll recall that Berkshire Hathaway has never done a share split. Instead, what they've done is offered different classes of shares. So you can own, if you want to buy the A, what is the A? Like over 200,000 US dollars. But the whole idea being that over time, you just want to keep the same number of shares in issue. At the end of the day, it doesn't really matter. I think Starbucks, which we spoke about earlier, did one last week. All it does is it gives retail investors more of an opportunity, because like you said, when people, but what matters is the value that you have invested in a specific company. It doesn't matter whether you own 5 shares or 500,000 shares. The value of the business is, in this case for Naspers would be worth 10,000 rands if you had 5 shares.
Doesn't this raise concerns? Because you look at the overall trend on the market and the likes of Steinhoff as well, the property stocks like Growthpoint, all of them are really reaching new all-time highs. And that again goes to the commentary that we've always heard of, that our market is overvalued.
From who?
From colleagues like you, your colleagues in the industry.
No, maybe in the industry. But at the end of the day, if you look at the platinum sector, they've registered 5 consecutive years of down. So, new companies penetrating with new businesses, offering new services are making all-time highs. But last I checked, I think Impala is at a 5-year low. So, the market is just a number. What matters is what companies you own in amongst that, for me at least, because I don't own the market. we own separate companies inside of. So it matters what you own. And Tencent, coincidentally, trades on a 53 multiple. Now, some people would fall off their chair right here. But if they keep up their growth rates of somewhere in the region of 30 to 40% per annum, which they have been registering, granted that the base is getting higher and higher and higher, it's going to become, then you're sitting with a PEG ratio of around 1.4 times, which by some other measures is actually quite expensive. So you might find a point where Naspers' earnings, which we are expecting sometime towards the end of June, there's no trading update because they haven't registered profits of more than 20% higher because they're spending heavily on their e-commerce businesses. You might find a point where there's a pullback on. Alternatively, the opposite could happen. Their e-commerce businesses are just starting to kick in. Their satellite TV business is tiny relative to its audience that it can service, and they just shunted through an increase. Who wailed? Nobody wailed, and then Vodacom and Cell C do it by 10 or 15 rands, and you wail. Yeah.
Okay, let's have a look at what we're looking forward to. We've just got back from Easter and everyone's still a little bit soporific. I can sense that because on the 26th we've got a public holiday. On May the 1st we've got a public holiday. The central banks are out the way. ECB's done its thing. Bank of Japan has done its. The US Federal Reserve's FOMC minutes are out. The South African Reserve Bank isn't going to sit for another 6-7 weeks, something like that. We've got the Apple Watch to look forward to, I suppose. We're in the midst of US earnings season, but it's just a momentum play. The market's going up because it's going up.
Lindsay, I think the next 3 weeks are going to be very, very important. And that's because US first quarter earnings, and everybody wants to gauge what the strong dollar impact on US company earnings were in the first quarter. So you've seen a significant weakening of commodity prices and specifically energy prices. So what has the positive impact been for the global consumer? i.e., have they been able to afford an extra Starbucks or an extra Johnson & Johnson shampoo or splashed out a little bit more? But what has the impact had on their dollar earnings? So I think that from the next 3 odd weeks point of view, watch closely and you'll probably see the same theme coming over and over and over again. And I think there is a European recovery happening right now that has coincided with the ECB's program. So you'll probably find people will say, oh, look, the ECB's program was a resounding success, but it probably coincided with a general broad European recovery. So forget Greece, because at the end of the day, Greece is a relatively small contributor to the overall European economy. Look at the trade numbers from Germany, and you'll still see that they're pretty strong.
Let's come slightly closer to home and on a small coal player, Keaton Energy, though, out with a production update and managing to see an increase in the numbers, though. Is it one that you pay attention to? Because we see the share price up so far today.
Share price up sharply. At the end of the day, you've got to ask yourself whether or not you think alternative energy is going to take a bite out of coal. I think in the South African context, we're still a long, long way away from that. Although all of the people I speak to on an individual basis have been looking at ways in which to de-grid themselves, take themselves off the grid. So you can buy an alternative solar solution with batteries for somewhere in the region of 100 to 150,000 rand. Now that might sound very expensive, but due to the fact that your Eskom bill's going up 20-30% per annum from here for maybe the next 2-3 years, it suddenly becomes a lot more viable. So the problem with people who are supplying to Eskom and also to India and even China is that all those countries are looking at alternatives. I think it's going to take a long, long time, but at the end of the day, as they say, the rocks didn't run out when the Stone Age ended, meaning there'll still be a lot of coal around when we've got alternative energy.
And maybe a use for them.
Maybe.
Exactly. Thank you so much to Sasha, nonetheless, for joining us today. That was Sasha Naryshkine, Director at Vestact.